Hello traders, it's 8:02 a.m. Chicago time on Tuesday, the 11th of June 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk on again, just like it was yesterday. Coming into the session, crude's leading the pack up 1.11% or 59 cents. The Nasdaq's up pretty strong, 66 points, 88 ticks, or 88 basis points. The Euro stocks, the E-mini Russell, the DAX are all up relatively strong. And the laggard today is the Japanese yen. Gold is off $1.60. The 10-year note's off 3 ticks, and the bonds are off 4 ticks. So overall, the market's showing a fair amount of strength this morning. Given the way the S&P closed yesterday, my expectation was for a deeper dive into Friday's range, and that didn't happen at all. What is driving this? I didn't find anything special. There's some discussion that Mexico's taking active steps to deal with the immigration issue and the pressure from the U.S. And then China says it'll respond to any escalation by the United States. Other than that, there really isn't all that much to tell us that this is a geopolitical drive. It looks to me like the markets are just drifting up as they push through some technical levels. So in either case, risk on for today coming into the overnight session. As far as what's on deck, we did get the PPI month on month for May at 7:30 Central, 8:30 Eastern. That's a low tier release, came in at 0.1% in line. We do expect IBD tip at 10 Eastern, expecting 59.2, also low tier. And then we get API crude oil stock change at 4:30 Central, 5:30 Eastern. Today, the prior is 3.5 million barrels. This evening, we do get the inflation rate also from China. Might want to pay attention to that. The expectation is 2.7% year on year. The prior is 2.5. I'm kind of always taking these releases from China, Russia, and so on with a grain of salt, but overall, it is likely to move the market at those hours. So that's what's on the calendar in terms of what the market, what we expected yesterday versus what we actually did. Let's take a look at the review segment. I've moved some things around on my screen, and so a little slower catching it. All right, so what's on those? What are the expectations? What were the expectations yesterday? The primary expectation, we were opening just above Friday's range high. The primary expectation is for a dip into the prior range as far down as 28.75 or so, and then eventually a pop out and a kind of a sideways close at 28.90. That was completely wrong. The secondary scenario is a pullback into the prior range, was looking for about 28.80 as a test area, and then an impulse out up and a push as far up as 29.07 as marked right here. That's kind of what happened, but we didn't get any squeeze at all to the downside. We got sideways and took off right away. I'm going to talk a little bit about these scenarios and why they exist and what the point is. They seem to be throwing a lot of people off. I see comments asking why we would come in with such a bias, but it's not a bias, it's a plan. In any case, yesterday, here's how we traded. Overall, really not too much done yesterday. We had a small open auction. The opening swing was the low at 28.89 up to 28.94 and a half. Back here, market pulled back and started to squeeze that opening swing high. Made an attempt. I was looking for the market to revert back and push into this 28.79. So I narrated a short trade from here down into the open and was looking for a test of the prior high and then continuation into 28.80 is the main target. That's per scenario one, and all it did was push into 28.90, the 28.90 area at the open, and then it turned back up for a scratch, and it was a good scratch. And then from there we bounced off of the mid VWAP and started to push higher, and we got right into that 29.0575 area, which was a 29.07 stock zone. That's the big target up above. It stopped short of there by about 2 points. The market then proceeded to push back into the range and to go neutral on the session. Now, once we got neutral, we talked about this in the Convergent Community Chat. We talked about this mid-short in the confluence zone here, and that held up pretty decent, although it was a very, very balanced day. Overall, it ended up holding up and then pushing out of the range and getting right down into the prior day's high. So we tagged yesterday, we tagged the prior day's high on the close to leave no gap for the session. Let's take a look at the profile alone. What does that profile tell us? The way it traded. What this profile is saying is that there's a lot of activity throughout these prices. Both sides are active throughout the session. We had really good volume yesterday, 1.08 million, despite the holiday in Europe with Monday. But we had a pretty steady profile volume throughout the session, except for above 2,900. 2,900 and above, things seem to dry up, and we can see the turn at the top of the session take place, and for the market to drop below 2,900 and hold under here. A clear low volume node right there. This is a very, very boxy profile, and what it's saying is that overall, the market is really exploring and it's contesting every price, meaning that as it's climbing up through the range, there's an opposing force that keeps stepping in, and that opposing force has to exist and has to be active for the volume bars to show up like they do, like this, very, very blunt throughout the range. And so as price goes up, we see sellers contesting the move up, becoming aggressive at every price, and it seemed to reject that high pretty well. Okay, the biggest rotation of the day really was pretty much that high, the short from the high, and then the short on the secondary push down right there. So this move and this move to the downside, and then the only strong up moves were from there to there, and then from there to there. So overall, to me, it seemed like it was skewed to the downside. Very poor low against the prior high. And that set us up, because of the way it closed, because it was neutral down, that set us up for a strong potential push to 28.80, at least in the overnight session, which did not happen. And that gives us a little bit more information, the fact that didn't take place. So let's carry it over into the overnight session and what we've done there. So we come back in. The overnight session tests that low again right there, 28.86, 28.86. And then the Friday high is 28.86 and a quarter. It's really 28.86 and a quarter across the board. So plenty of support resistance right here between Friday, yesterday, and the overnight session, and then it proceeds to push higher, and we've been staying above the mid and the and VWAP. and the open for most of the session. So I'd say about 95% of the inventory is long, likely to be long, and we pushed that high that we put in yesterday to get to 29.08, which is a surprise. The expectation is for the market to push down, consolidate, and squeeze down. And what we see here is a fair amount of strength coming into today's market. These kinds of things where an expectation or a higher probability doesn't play out actually creates an opportunity. It is not a mistake or a loss. It's a small opportunity. And so the overnight profile, the volume is relatively okay, but the overnight profile, gosh, it really is very, very ugly. There's clearly some price discovery going on, and the market is just drifting up. It looks like it may open out of range again, and lately out of range means that it doesn't revert back into the range very well. We'll see if it does today, but we're one time framing up on the day time frame, and it's a fairly strong market. So if you're listening to someone out there who's telling you how, this is a dead cat bounce or whatever, it's really pushed through all the key areas, most of the key areas so far. The midpoint of the sell-off from the highs was 28.4250. We paused there. We didn't really do much with that. And then the 61.8% was at 69.25. We're above that. It really is barreling along pretty well. So let's get rid of this fib. It's pointless now. Look at these daily bars. These are RTH only bars, and you could see very clearly that we're one time framing up in a pretty strong uproaring kind of mood, and we have Delta coming along with us, and the performance has been pretty well. Yesterday, this formation that we left behind really set us up for a potential drop. Today, for a potential pullback, usually when we see that kind of formation at the top, but overnight that was canceled out. So we'll see how much strength. So when the market opens today, we want to see how much strength there is on the buy side on the open. And any weakness will likely take us right back to 2,900, and then into push into 28.95 is what's expected. Okay, so that's what I'm looking at. Looking at the order flow overnight, you could see that, here's that algo that kicks in every morning at 1 Central. Whoa, that's a terrible color. At 1 Central, and, doing its job. But overall, the market's been just drifting up very cleanly throughout the overnight session. Looking at the overall liquidity, you can see there's a fair amount of liquidity sitting up here relative to the rest of the book, but most of it is fairly fresh. What's not fresh is the 29.10 offered. It's been sitting here all night. Other than that, I'm not seeing anything in the book that's worth noting, to be honest with you. So looking at 29.10, 29.14 as the key liquidity areas. If not, then if we do get up to 29.19, that presents a pretty decent liquidity area as well, in confluence with the 29.1975 stock zone up there. Okay, so that's what I'm looking at. This is likely to squeeze through very slowly. We'll see what it does on the open, but that's basically what we've got. Looking at what's expected for today. Come on, chart. What's expected for today? So overall, let's see, current screen. Overall, the expectation this morning, again, I'm still looking for that dip. A dip provides a better push higher. I'm still looking for that dip, but this morning I'm looking for it to actually push higher immediately to 29.14 or so. I'm looking for a responsive seller to bring us back towards 28.96 and then 28.94 for a higher low again, but I'm expecting the market to be responsive today. I'm expecting that we're likely to pull back to that 2900 and potentially 28.94, 95 this morning as the primary scenario, as opposed to being a bullish scenario. The secondary is an open auction again, pulls back down, gets close to the 2900, impulses 29.14, pushes to 19.75 actually, and then holds steady before pushing higher or potentially closing somewhere in that 19 area. That's scenario 2. One thing I want to address here is this idea that, man, you're really messing yourself up by coming in with this bias. Like, these scenarios just create a bias. It's an imaginary thing. But here's the question that we are looking to answer with these scenarios. What is the most likely big trades, the first, second, or third big trades of the day? So I'm not sitting here looking for the market to confirm my bias or anything, but what scenario 1 in this case would tell me is I'm creating a benchmark against which I can measure the market's behavior. So if the market opens and it just starts ripping in a push higher, which means it's initiative up on a gap up, then I know scenario 1's no good. I know that I need to watch out for 19, 24, and potentially 31.50. So I know that I'm laying off the sell side. But if the market pushes higher in a methodical way and starts to turn somewhere around 29.14 or so, I know that the overall range will likely support a push down into 28.94. And so I'm able to hold for that trade, and now I have scenario 1 in play. Will it wiggle here? Will it wiggle there? Will it turn exactly at 29.14? It doesn't matter. It doesn't matter because I have to trade what the market is telling me versus what I want the market to do. So the goal with these scenarios, just to make sure people understand, the traders understand, the goals with these scenarios is to just create a plan on a map for how we will respond in the key areas above and below that we are likely to respond to, much like a general would look down at a map of a battle and decide where to place troops. How the battle plays out is really up to the moment, to those acting in the moment. You have to respond to what the conditions give you, and the market does that very, very well. The market decides for itself what it wants to do, and now it's our job to align ourselves with it. But if things start to turn where we expect them to turn, then we have a plan, an extraction plan, or whatever you want to call it, the military, point Bravo or Alpha Bravo, Echo, all that stuff. Areas that we expect the market to likely tag, and that keeps us in the trade. That's what we're looking for. Not, hey, the market should have wiggled here and it should have pushed here and then it should have stopped here and I didn't make money because you gave me this terrible scenario. We're still responding to what the market does. The scenarios are just there to say, big picture, this is what it may do, and that's all they're good for. Good luck today.